Welcome back, traders. I'm Brianna Valesky here with Joel O'Connor on Benzinga's pre-market prep. We've got Ryan Mallory on the line. He's the founder of SharePlanner.com. Ryan is an accomplished swing trader and founded SharePlanner in 2007, which is based in Central Florida. Ryan, how are you doing this morning? It's probably a lot warmer where you are.
Yeah, it's already in the 80s here.
Oh, okay, no, you can't talk about the weather anymore. To get things started, let's give it a little bit more of your background and tell us about SharePlanner.
Yeah, I've been swing trading and for pretty much since I was 11 years old. I got started by my father, and he introduced me to the stock market, and then it slowly migrated into a full-time job later on when I got into adulthood and everything. And no, the market's been great. I mean, I'm not what I would say like a day trader by nature, or a long-term investor. I found that sweet spot right there with swing trading, and that's where SharePlanner has been a great asset, because there's not a lot of pure swing traders out there, and that's one of the niches that I feel like that I can serve the community of traders with.
And another good thing about taking that little bit of longer time horizon, you're not competing with the HFTs as much, right? Because if you're going for, 2, 3, 4 points in a stock and you're risking a buck, you're really not that worried. You want in, you get in, and you're not worried about trying to work a particular price. So do you do it through going in the actual equities? Do you use the options market? How do you trade when you get a signal?
I do only equities. I don't do any options. But to the note that you had just mentioned there about going for a few bucks versus risking a buck. That's really where like the entries are so important, because it's not about hitting it right when the alert goes off per se. It's more about the relationship between the stop loss and the entry price. If that gets skewed, then the reward side gets skewed when it comes to the risk reward ratio.
Okay, so let's delve into some of the stocks that you have on your buy radar. Best Buy earlier in the week, and they said everything right, good earnings, stock buyback, raising dividend. I think that was included in that. And you had a big pop. I remember in the pre-market it was back over 40, but came back. Now you're kind of hugging that level. Is this something that you're in or looking to play on a breakout?
It's definitely an opportunity for today, depending on how this market fares. But what you have there, I mean, if you go back to December, I mean, you have pretty much a straight line going across that $39.95 to the $40 range. And so anything like that goes above that could show like a new price expansion for the stock, and a new leg higher. And what's cool about that is that you can put a stop loss like right around that $39 mark, and basically you have a dollar risk for probably anywhere between $2 to $3 worth of reward on that trade.
For a swing trade, or for you're talking about the setup for today, right? Like if it goes above 40?
Right. If it goes above it today, and then entering it as a swing trade. And then if you look at the last couple of days, I mean, the volume's picking up nicely in the stock as well.
Yeah, I think one thing about that, and those levels are tough. A lot depends on the market. If you're going for a swing trade, yeah, you can give it back down to 39. But like a lot of times, if I see something like this, you get the breakout out of 40. A lot of times they flush you out, take it back down there under 40, 38.90, 39.80, 85, something like that. Then they take it back up. So on a day trade, I'd use a little tighter stop, but be interesting. You mentioned a great level there. Good news out of Costco today. Is this something you're already in a swing trade looking to exit, or something to potentially initiate a trade today?
Potentially an initiated trade. I've been watching this stock for a while there, and you can see that
Wow.
for the good part of February, it's just basically coiled the entire time. I mean, there's been no real movement either direction. But with it trading above 150, there's a good risk reward opportunity there where you can get in as closest to 150 as possible, and then probably put a stop loss. Once again, probably not a good setup for a day trader. But from a swing trading perspective, you could put a stop loss at like 145.50. So there's about $4.50 worth of risk there. But the opportunity is that it continues to push higher, maybe into that 160s, and you get a pretty good return for your the amount of money that you risked on the trade.
Yeah, look at that consolidation too. Really, the last couple days bunching up at 148. Now clearly through that level. Also, stock we don't talk about much. Midland, Michigan company, Dow Chemical.
Yeah.
Ooh, look at that. That is a
there's
juicy looking chart there. Look at that, above 50.
Yeah, and the 200-day moving average doesn't seem like it wants to break it on, and it keeps flirting with it. It flirted with it back in December, and it's been almost on a regular basis been playing with that 200-day moving average, and it can't seem to really break above it. But you have to assume that once it does, and I think on this one, what's going to be most important is can it close the day above the 200-day moving average, because intraday it's gone above it just as late as yesterday. It goes above and below it all the time, and but it can't seem to close above it. So it seems like those sellers are coming in every day to book profits. But you assume that if it goes up above $50, there's a good chance for it to start to really take off there, and you can play it with a stop loss at around 48.70. So once again, you're keeping that risk very favorable, only risking a little over 2% of the position on that trade.
And Apple, you're leaning on all these lows in the lower 128s here. I mean, you got a good risk-reward ratio here. You're expecting that support to hold?
Yeah, there's definitely seems to be some support resistance right there in that 128 to 129 area. And, I mean, maybe this rally's over on this one. I don't know, or for the time being at least. It's hard to tell. I mean, if it breaks below, say like 126, 127, that's probably going to be a good reason to not stay in that trade any longer. But the upside is from what we've seen, I mean, when this thing really starts to move, I mean, it can peel off, $10 to $15 in very short order, regardless of the market.
Good risk-reward ratio. GM, a little bit quiet as of late, made that sprint up from 33 up to 38. Now just consolidating in the mid-37s. What's your take on GM?
Yeah, I mean, so the consolidation, the thing is you don't want to be stuck in consolidation, with a trade. So, I mean, if you're in the stock and the stock's not moving anywhere, you don't want to just expose yourself to, unnecessary risk, because you never know, when the latest downgrade is going to happen or whatever. But when it starts to move out of that consolidation period, that's really where you have a really good opportunity to manage that risk in a great way, and also put yourself in a position for the most amount of reward. So you can get in GM around like 38.01, put a stop loss at around 36.96, which would be right below that consolidation. Because here's the thing: where I put my stop losses, it's not just like a random number or a fixed percentage from my entry. It's at a point to where when the stock hits my stop loss, it means that trade is no longer a valid trade. My trade thesis is broken, and the stock, there's something wrong with the stock. And that's where I think that as traders we should be aiming to put our stop losses at, is a place where the stock is really not working. It's really a messed up chart at that point.
Okay.
And sometimes even worth going short in.
Reversing, yeah. I mean, I'm looking at GM. You talk about consolidation here. Double bottom at 37.30 and another low at 37.36. Last three highs between 37.81 and 771 and 781. So wicked consolidation. You're going to be a little bit more generous than getting above the 81. You like to see it clear 38. So nice setup there. I'll keep an eye on GM today as well. Level 3 communications. We don't talk about that one much. What's your setup in that?
Yeah, now this one's actually broken out already, and but the risk and the reward, is still favorable to still get in at it at this point. With this one, I would put a stop loss just below 53. That puts you below the lows from February 26th. Because if it breaks below the lows of February 26th, that's a perfect example of a chart that's gone bad on you. And but as long as it doesn't hit that trade is still very valid. It's got the support of the 20-day moving average right underneath that it continues to ride up, and anything above 54.40 is a good pick. Now it's trading at 54.70 right now, so if you can get like an intraday weakness and then be able to get in around 54.40, that would be great.
Okay, you also you're looking at some shorts here. ConAgra, food stock. What's the setup in ConAgra?
Yeah, I tell you, a lot of the packaged goods, stocks are just really looking pretty bearish. But there's a lot of resistance on CAG right there around the 35 mark, 35.08, and over the last few weeks, it's actually it took a huge sell-off first, and then it rose nicely right into that resistance. And then the last 2 days, you've seen where the sellers have stepped back in again and not going to let it break back above that resistance level at 35. And the volume was pretty strong on it yesterday, so I could easily see where this thing would probably start pushing back down towards the $33 level again in the near term.
Okay, all right, nice setup there. And another potential short, Kraft Foods, KRFT.
Yeah, this is a neat trade setup here. I mean, you have a lot of support right there at around 63.50, and it's broken that already. However, I mean, you can get short on this thing at around 63.20, where it pretty much closed at yesterday. In fact, it may even push a little bit higher today with the early morning strength that we're seeing from the broader market. But yeah, I mean, you could probably put a stop loss at around 64.48 or so, and then at that point, it's actually breaking out to the upside if that stop loss is hit. But if not, then it's going to be still in that breakdown mode. So yeah, KRST looks like a pretty good one. You also have a double top in that going back into like December or to January and early February. So the consolidation is like right below that neckline of the double top.
Ryan, I want to break in here and talk about some of the movers we have this morning. Obviously, we already went over Costco. Adam Sarhan was on our show yesterday, and he was bullish on the entire supermarket space. We got Kroger earnings out this morning. I mean, big beat. What are your thoughts on Kroger right now? If you want to pull up a quick chart of that.
That stock has been on an impressive trend, and then all of a sudden we started seeing the heavy volume coming in on it, and then all of a sudden you have the earnings that's boosting it, much higher in the pre-market here. It's really a coin toss on what Kroger wants to do with this. I would probably say it's going to continue higher throughout the day just because of how much selling that we've seen over the last 7 to 8 days in the stock. So I thought it was pretty bearish that it broke its trend line about a week ago. But I would have said get short then, but not hold it through earnings. And then with the earnings now out, I'd probably say, just back off and let it run its course today. Because I mean, it's already run like $4 in the pre-market. Now you're starting to get into a lot of risk exposure if you're going to trade this stock. From off of the daily chart, you put a stop loss below 69 or something like that, and you've got a lot, you've got about 5% worth of risk right there that you're having to deal with on an individual position.
What about anything in the healthcare or biotech sector? We got a PCYC moving around this morning on news of an acquisition by AbbVie.
Yeah, and that one may see a bidding war, obviously, in the days ahead. But for me, I mean, trying to trade off of the news of the day, especially with the buyouts. I mean, a lot of it's rumor driven. So sometimes a company might come out later on and say, yeah, we don't have any intentions of doing that. And then I think we saw that with BlackBerry like a couple of months ago, where there was rumors about BlackBerry, and then it shot up after hours, and it just shot right back down when the companies that were involved came out and said, no, we have no intentions of buying out the company. But I mean, like in terms of other biotech stocks like ACHN. You actually have a pretty big, and I'm not a huge fan of shorting biotech stocks. I think there's too much risk in doing that. But there is like a head and shoulders pattern there on ACHN if you go all the way back to like October. It's a little bit messy, but if it drops below, the price level at around $11 or so, or 11.05, that's going to be a confirmed head and shoulders pattern right there, and so it could actually see a move down at sub 10, maybe even below $9.
Going to a few of the big movers from yesterday. Alibaba caught a bid, double bottom, 80 and change, off to the races, trading up another 81 cents in the pre-market. Are you inclined to, go with the momentum on this one? I mean, it's kind of a messy chart, or for me, I'll be patient. I'd like to see this thing maybe make a high at 87, pull back $3.50, and then get in with a little lower price. Are you prone to chase something like this, or are you going to let it come back to you?
Yeah, you're definitely chasing if you get into the stock at this point here, especially if it gaps up this morning. But I mean, there's definitely some resistance around that $86 level, and there's some resistance there with the 20-day moving average. So it'll be interesting to see if it can push through all of that today. But if you look at the 30-minute chart of BABA, I mean, there was a run yesterday of like just eyeballing it. It looks like 13 or so green bar candles in a row. A lot of times when you get that many consecutive green candles on a 30-minute chart, it's primed for a pullback. So, and then the other thing too, back to the risk discussion. I mean, so much of our thinking revolves around the profit opportunities that a stock presents. But really, the key is managing that risk, and it's sort of like the boring side of stock because nobody really wants to think about the risk side of it. But BABA, if you start chasing it at this juncture, you're exposing yourself to a lot of risk because where do you really get out of the stock with knowing that the stock is not a favorable trade setup anymore? I mean, I look at the chart and it's like you got to basically put a stop loss below $80 a share to have any legitimate risk management on the trade. But then if you do that, then you're looking at 7-8% risk on the trade, and that just seems like a ton of risk to have to make up on the profit side if you're wrong. So,
Ryan, I want to jump in here really quick. We do have a question coming out of the chat room. Rob Hood wants to know if you have any thoughts on SVU. That'd be jumping back to the grocer space. That's super value.
Super value. Oh man. Yeah. So just pulling up that chart here, lots of strength off of that 50-day moving average. I mean, it's really impressive how well it tends to stick to that 50-day moving average, and you have a 50-day moving average that's pushing higher here. And, with that said, it's somewhat stuck in a large trading range. You got the high of the trading range at around 1042, and then you have a low around 977. So there's really no trading edge in that stock unless you just want to play it as a bounce off the 10-day moving average, which it pretty much did that yesterday. I would say if you're going to play it off the 50-day moving average, the opportunity to have gone into it was yesterday. Otherwise, you're really just stuck in a trading range right now on SVU. I mean, maybe around 1050, it's gonna pull back again.
Okay, we've been on the line with Ryan Mallory. He's the founder of SharePlanner.com, discussing his very well-defined strategies with risk-reward, something that we like to talk a lot about on the show. Ryan, thanks for joining us. Have a great trading day. We'll speak to you again soon.
Thanks so much, Ryan.
Thank you.